Jump right to that. 49.5 million contracts were trading yesterday. Now let's go back to Wednesday just for a moment. So Wednesday, pretty interesting day, and the acceleration that we got Wednesday and that big move to the upside certainly did stand out, and it was pretty impressive. That being said, how about Thursday, and how about all the volatility that has crept back into the market? I shouldn't say it's crept back, has jumped back into the markets that we're following each and every day. So we had this monstrous move yesterday to the downside. You look at the Dow. It's down 560 points. That's 1.7%. But how about the NASDAQ? NASDAQ absolutely crushed, down 3.5% yesterday, 480 points. Now, this was just an index that was trading over 14,000. And here we are now very rapidly approaching and probably going to go right through that 13,000 level. So it really has been a really fast reaction. And I think the acceleration of what we are seeing here really does stand out. Now, technology certainly led yesterday, down about 3.5%. Materials down about 2.5%. Energy down about 2%. Semiconductors, boy, do they stand out, down 5.5%. Yes, 5.5%. Now, early today, they were starting to move to the upside. We had a nice little bounce. Things were starting to feel a little bit better. We had the NASDAQ really started off. It went from flat to up. It was up about 130 points. We got into the day up about 140 points. And very, very rapidly started to lose some of that move to the upside. As a matter of fact, let me take a quick, because it's moving so fast. Now we're down approximately 80 points on the NASDAQ. So it's flipped from 140 points to the upside. Now suddenly we're down 80. By the way, looking over at the Dow, down 400 right now. You know, in the pre-market, we were down about 120 points. We got closer to flat. We did start the day off flat. We started to sift a little bit lower, down about 80 points pretty quick. Before you know it, it's 250, then it's 300. Now, right now, as I said, we're down 400 points. We've got the volatility index. Now, yesterday, that range was from 23 to above 30. We actually pushed up towards that 31 level. So it gives you a little sense of just how much we are seeing and the moves that we are seeing, those intraday moves. And I brought that up the other day because it's so important. If somebody just fell asleep and they looked at the close-to-close closings, not a lot of movement. But if you look what's been happening within the market day, it really has been volatile. So it's not a surprise to see volatility creeping back up. As a matter of fact, we started off the day around 27.5. Right now, we're already leaping up above 29 for the volatility index. Early on, and things are moving so quickly that a lot of these numbers are going to change. But early on, semiconductors, they started off pretty decent. They're up about 1.5%. Tech was up about 1%. Biotech was up about 1.5%. Things have changed in a hurry. When you look over at the financials, the industrials, and materials, all moving into the red. Matter of fact, financials very rapidly down about 2%, and so that stands out. But leading the downside move today, energy. Energy down about 4%. We've talked about how the moves to the upside certainly have been impressive, but that doesn't mean, and when we talk beta, beta doesn't move just in one direction. That's both directions. So you are getting a little taste of that today with that push to the downside right now in terms of energy. And so when you look over at the Dow, it's not surprising. You've got Salesforce, that's pulling on the Dow. You got Chevron, that's certainly pulling on the Dow. You've got Dow, you got JP Morgan, Goldman Sachs. So kind of covered what we're talking about there, which is some of the financials, definitely under some pressure there, and energy. And there's certainly a lot of pressure there. So I know we got a busy day. I'm not on the halftime report today, but I will be on the 5 o'clock Fast Money, 5 o'clock East Coast time Fast Money show. And we've also got our cocktail hour with Market Rebellion to talk about the week and review it and have all the gang there from Market Rebellion. Always a good time on a Friday. We've been doing this for well over a year. And we just decided during the pandemic specifically, hey, look, let's reach out and let's have some conversations about what we are seeing. So we are certainly not seeing some of the markets that we had seen last March, but we're starting to get a little bit more volatility this week. And so we seem to be pushing in a direction that's pretty interesting. And a lot of that, you look at the 10-year, that makes a lot of sense. That accelerated move in the 10-year that has taken off, certainly a lot of things have happened because of that. And a lot more will happen as we continue to watch that movement as well. So CF Industries, we're talking about agriculture, right? We're talking about fertilizer, all the rest of that stuff. So November, this is 27. Now it's trading 44.73, but we still have a buyer of March 52.5 call. So they're expecting a pretty significant move given where the stock is right now and where the strike is that they're buying, but they're only paying 20 to 30 cents. So just a speculative play, maybe to the upside, but could have a nice move. And just remember this, if the move happens and accelerates quickly enough, those options will start to move. Now, if it's a slow move by the stock to the upside, those options are going to have a really hard time. So just keep that in mind. But those are the March 52.5s in CF. L brands. So what is that? It's Victoria's Secret and all the rest of that goes along with it. It's trading around 53.55. Here's an interesting one. We don't talk about puts as often because a lot of the time they're very difficult to determine. Are they hedging? What are they doing? What's the story there? But this one I think stands out for me a little bit, so that's why I highlighted it. So we've got a buyer of next week's March 5th. So 1 week option. Next week's March 5th, the 53 puts. They bought about 5,000 of those for a little over $2. They also look like those were getting spread off by selling the lower put. So they're buying the higher put, selling the lower put. So it's a call spread to the downside, expecting some pullback. And those 50 puts that they're selling for $1. So they're putting on that spread for a little bit less than or a little bit more than $1 for that spread. So is it a possibility? Sure. If the markets continue to pull back, I think a name like L Brands certainly could be one of those names that could be caught up in that whole thing. And so it's had a little bit of a move, and it makes some sense why somebody might be speculatively putting on something like this. 5,000 of those, pretty decent size as well. Folks, I got to tell you something. Knowledge is king. We talk about that all the time. Get the knowledge that you need to know to understand the options world, because I'm telling you, this is where the activity is. This is where the options. It's not a sales thing. Just look at the volumes. When I tell you that we traded 49.5 million contracts yesterday, and if I tell you 2 years ago it was record volumes at 20 million a day, that gives you some sense. And I bring this up every single day because it's important. The options markets give you opportunities as well, and you can control risk. So you have to have that understanding. Otherwise, you're going to have a bad experience. Folks, have a great day of trading. I'll see you later on at 5 o'clock Eastern time for both the first half hour of Fast Money. Then I'll be over there for the cocktail hour with the Market Rebellion crew. Have a great day of trading.